Welcome back. 75 points higher on the SGX Nifty, so we should have a good rally today. It looks like perhaps, especially the kind of setup we have, global markets, crude, everything is looking good this morning. Ashwini Gujral, Mitesh Thakkar and Prakash Kaba now join us. Good morning, Ashwini. What's your first trade and what's your overall trade for the day today?
Well, good morning. We've been up for 5 days, almost 500 points on Nifty will be hit on today itself. Big rallies even on Bank Nifty. Now again, as a professional trader, it becomes difficult to buy after 100 points gap up after 5 strong days. So one thing is definite, that the market seems to have made a sustainable bottom and all declines should be bought. You may or you may not get them. But if you have positions taken on Monday, today, because of this good news, you can take half off and, wait to enter on declines again. But buying today may not be the best risk reward, etc. But my sense also is that because we outperformed on the downside because of macros, chances are the next week also we should outperform on the upside, because these extra factors are now getting taken cognizance of by the market.
Okay, so good morning, Ashwini. What would the contours be then? Let us assume we open with a 40-point gap up. Is there a trade there, or you'll just wait for the dip?
See, 40 point will be a dip because it's showing 75 right now. So if you open 75, come down to 40, then you can buy. But to buy at 10,500, I don't think is the best of trades. The point is not whether it can go up or not. The point is, do you drive on the wrong side of the road?
Okay. Okay. Let's find out how to trade the index from Mitesh Thakkar and Prakash Kaba as well. Mitesh, do you expect the short covering bounce to continue? Would you play for upside on the indices?
Good morning, Nima. I think, I'm not sure whether there will be a short covering bounce purely because of the fact that last few days would have kind of, cleaned out a lot of shorts any which ways. But yes, there is some kind of an upside continuation which can happen. Staying beyond 10,440, 450 was important, and I think we'll open with a gap most likely above that level. So in case we don't break below 10,440, 430 zones, I would be positive and look for, this rally to possibly extend to about levels of 10,580, 600 if you give it another 4 to 6 trading days.
All right. Take your point. So those are the spot levels. Prakash, good morning. What would your trade be?
Good morning, Tata. Well, the trend is okay. What we saw yesterday was a consolidation. The uptrend continues. The technical target that we had yesterday was 10,441. That got achieved. The next technical target beyond this is 10,503 to 10,559. It's heading up there. May take until perhaps anytime, it could take even until Muhurat, we're going up. So if we get dips, those are buying opportunities. Strong support in the vicinity of 10,400. If we get a dip, buy it. If trade opens with a gap up, what do? Wait for a reaction and buy the reaction, or closer to supports of 10,400. That's the way I would treat Nifty today.
Okay. Ashwini, now if we can come to the stocks, what would you trade today?
See, basically everything that got impacted with the macros, etc., they got beaten up. So anything that benefits from lower crude prices, that should outperform. But other than that, also I think overall financial should outperform, because that is a major beneficiary of lower crude. So L&T Finance is a buy with a stop of 132, target of 144. Axis Bank is a buy with a stop of 597, target of 620. BEML is a buy with a stop of 627, target of 645. Indigo is a buy with a stop of 918, target of 945. And Divi's Lab is a buy with a stop of 1490, target of 1540.
Okay. Mitesh, good morning. What's on your list?
Yeah. Good morning again. I have 4 buy calls, mostly from the mid-cap side. Granules, I think, after the numbers has been doing good, and we have seen the chart structure gain strength. So I think there will be continuation on the upside. I would buy this one with a stop at 99 for targets of 106. NBCC reversed with a gap yesterday. That's a buy as well. Keep a stop at 55. Look for targets of 64 here. Torrent Pharma is a buy. The indicator setup has turned quite positive. So buy with a stop at 1677. Look for targets of around 1800. And my final buy call is on Century, where again the chart structure has gained strength. So keep a stop at 820 half. Look for targets of 865.
Okay, and Prakash, your picks?
Rima, I'll start with BEML. That looks good. The technical target that I have is 675, stop below 600. And if it goes to 675, then maybe in the next couple of days, even go to 725. It's a good, strong build-up out there. I like Dalmia Bharat as well, slowly inching forward its move. Targets on the upside in the vicinity of 2,200 plus zones, stop below 2,100. I like Hindalco as well, certainly looking kind of a base formation. Up move should continue to levels closer to 238, 240 zones, stop below 225. Dabur is a solitary sell, weak structure, can see a slide to 360. If it happens, fantastic. If not, good. Stop about 380.
Right. Gentlemen, do stay on. We have a big guest joining us now. HDFC posted a 24% growth in the bottom line this quarter, but interest expenses have risen. And that's a big 20% from last year, 10% from last quarter. KK Mistry, Vice Chairman, joins in. Good morning, Mr. Mistry. Always a pleasure to have you. Just wanted to ask you your, if the current stress in the builder segment in companies like, home finance segments like Indiabulls and DHFL is an opportunity for you to increase market share. And what's the strategy there?
I don't want to comment on anyone else, but historically we've always told our investors that we are not in a market share game. But having said that, if you were to look at, first of all, market share numbers in India are very difficult to sort of compute or calibrate. But if you look at our own growth, if you see from the results for the September quarter, our individual loan book on an AUM basis was higher by 18% and the overall loan book was higher by 17%. If you look at a similar number for the banking system, and this is based on the data that RBI furnishes every month in terms of sectoral deployment of credit, then the growth of housing loans in the banking system was about 15.5 or 15.6%. So in reality, we could have gained a little bit of market share. But our competition over the years, we've always said, has largely been the banks, has largely been banks like State Bank, ICICI, Axis Bank. These have been our biggest competitors.
Now, I take your point that, you're also growing faster than the home loans in the banking sector. But are you getting any inquiries for sanctions on account of loans not being given by other housing finance companies, say like a DHFL?
Well, the growth in housing, as I said, has been strong. Now, whether it is because someone is not taking a loan from some other entity and coming to us, that is something we don't know, we can't answer. But the structural demand for housing in India will always remain strong, and we continue to see demand for housing remaining strong, notwithstanding whatever concerns the market is having in terms of slowdown and stuff like that for the sector as a whole. But we are not seeing that. We are seeing structural growth continuing to take place in housing.
Okay, but so many developers are under stress like Radius, Supertech. If you could just tell us what is your exposure to them and how do you see builder financing sector over the next couple of quarters?
So if you look at our balance sheet as of 30th of September, individual loans constitute 73% of our total loans, which is a little higher than what it was in the June quarter. In the June quarter, it was 72%. In the September quarter, it is 73% of our lending. Developer funding used to be about 13% of our total lending in the June quarter. Now it is 12% of our total lending as of a balance sheet date. But if you look at it in terms of incremental lending in the 6-month period, 81% of our incremental loans have been to individuals. And a large part has been to the lease rental discounting market. So there would be still incremental loan lending that would have happened to construction finance, but as a proportion of the total lending, that would now be lesser than what it is on a balance sheet basis. And yes, we don't have any exposure to Supertech or, we have lending to a variety of good, strong developers.
Okay. Take your point, not to Supertech. Can you give us some guidance on NIMs in a rising interest rate scenario? Is it likely to reduce?
We never give guidance, as I said earlier, but having said that, if you look at it historically over the years, whether it's a high interest rate environment or a low interest rate environment, our spreads have generally remained within a very narrow band. NIM is then a function of how much capital you're carrying, what's your level of leverage and stuff like that. So I would focus more on spreads than on NIMs. And our spreads have, over the last 10 or 15 years, remained within a narrow band. The band has been between 2.20 to 2.35%. Our spreads in June stood at 2.28%. Our spreads in September also stand at 2.28%. If we break up those spreads between individuals and non-individuals, individual spreads stand at 1.91%, non-individual spreads stand at 3.11%.
Mr. Misri, last month, the NHB, or the National Housing Board, has hiked the refinancing limit for housing finance companies. Has refinancing from the NHB increased for you in the last 1 quarter?
We do get some refinance from the National Housing Bank. So if you look at it from say a year ago till today, the refinance we got from National Housing Bank has not really gone up in any significant manner.
Okay. Thank you very much for your time and speaking to CNBC TV18. Get into a break. Up next, Sanjeev Bhasin of IIFL will join in with some long-term stock bets. Also, Mr. S.P. Tulsian will join in right after the pre-opening. Stay tuned.